Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. Brian, it's great to see you as always. Welcome back to Trade Talks. And it seems as if we finally got some volatility back in the market after a few days of hitting all-time highs.
Yeah, we're seeing a little pullback today. Again, when I follow my social media feed, it seems like there's a lot of bearishness out there, and I don't know if that's what's helping to drive the indices higher. So 1 or 2 days of pullback is what we're seeing now, but we're just off of making record highs. The S&P made record highs yesterday, as did the Nasdaq-100. So it's very, very modest. I think it's very short term. Mm-hmm. The long-term trend, even the intermediate-term trend, is still very much to the upsides. You can't argue with price, and prices this week making new highs. So at any point we could see a pullback. I think the S&P has made a record number of days of not declining more than 5%. So, we're certainly overdue. And we have those seasonal factors out there as well. That would argue that this would be the right time for it. But, at the moment we're seeing very, very little signs of, a breakdown in indices. Possible maybe it's beginning now, but, there's been a lot of people out there, a lot of pundits out there calling for a deeper correction. We just haven't yet seen it. Yeah,
Brian, you're absolutely right. We have some important geopolitical things happening right now, and that really hasn't even moved the needle. In fact, as you had said, hitting all-time highs. But I just wonder, and you and I have spoken about this before, that you have that basket of the top heavyweights in the S&P, in the Nasdaq-100, that are really dictating the movement of the indexes, and those are the ones that are hitting all-time highs. But when you dig a little bit underneath the surface, it doesn't necessarily look just like that. The picture's a little bit different. So with that said, let's pull up your Bloomberg here. Let's take a look at some fresh levels to watch in the Nasdaq-100.
Yeah, and we noted last week, the breadth it's in certain metrics. There's a number of different breadth metrics to look at, and some of them look more attractive than others, but there's always going to be that rotation and that profit taking underneath the hood of the index amongst different sub industries and things like that. And so we're seeing the biggest weakness in those smaller and mid cap names, the large cap names right now. Not just in the NDX, but in the S&P and the Dow. All are seeming to be driving higher here. So right now we're looking here at the Nasdaq-100. As you can see, this right here, yesterday's candlestick, close at a new all-time high, new intraday all-time high, modest pullback here. Would not surprise me if we saw some continued downside to this, support level around 15,150 or so. But that would be, common technical price action. If you can see, we zoom out a little bit, all the moving averages, the 50, the 100, the 150, and the 200, all still properly lined up with the shorter averages trending above the longer term averages, but they're all moving higher, all lined up. So that is constructive. If we look here at the weekly candlesticks, we could see, we're actually breaking out from this 3 or 4 week range right here. So a little bit of pullback today. We'll see what tomorrow does. If this was to pull back to, the bottom of where we opened this week, then, that would be like somewhat of a bearish type of price pattern. And so we'll just wait to see if next week there's confirmation. Along with the geopolitical risk, we do have Jackson Hole tomorrow. So that's always a wild card. What is the Fed going to do? What is Powell going to say? Is he going to be hinting at taper or not? So, those are all things that could be a factor in the short term to drive in, the price action over the coming days and weeks, and, whether or not some investors are going to look into locking some gains, and others on the shorter term basis looking to maybe try and take a shot on the short side. When we look here at the breadth, as I mentioned, there's a number of ways to look at breadth. We can look at the number of stocks within the index making 52-week highs. That is beginning to tail off, but it's nothing too alarming right here. We're still, in that 11 to 18% range where we've been the last few months as we've been breaking out. If we want to look at the advanced decline line, this is very constructive looking. Just yesterday, it made a new high on the advanced decliner. So, that's something to be bullish about. Some people like to look at the number of stocks within the index making that are trading above their moving averages. So here we have the percentage of companies trading above the 50-day average. it's, in the range where it's been for the last couple of months, nothing too bearish there. It's off the highs, but, nothing, deeply concerning. This is the percentage of companies making, that are trading above their 200-day moving average. And it's around 83%. So nothing very, concerning there. I wouldn't necessarily call that a bearish divergence.
Brian, excuse me one second. When you look at the percentage of companies that are moving over their 50-day or 200-day moving average, is there a number that you want to be at? I know when you look at RSI, there's certain levels that you look at. What should be the average? What would be concerning, and why at what point?
So maybe if we zoom back a little bit further in time, we could see that it may be more about the trend that we would want to take a look at. I don't know if there's an absolute number. So if we look here at the number of stocks, that are trading above the 200-day average, it's kind of in the middle of this range where it's been holding for quite some time here. When we broke down below this, say, we'll call it 75% level back in the first quarter, this was also when we had the biggest pullback in the index. Usually what we're looking for when we're looking at the breadth measures is when the index is making new highs, is breadth making new lows? And we're not seeing that. We're not anywhere close to that on this metric. The shorter term metric, the 50-day moving average, we're still in the midpoint of that range. So I would be concerned if this was breaking down, below the 50% level, which was the low that we saw in June. And then certainly the 35% level, while the index is making new highs, so that's the type of divergence I think would want to be on the lookout for. But when we look again at the advanced decline line, we see this is confirming the new highs in the index. And so, so I don't think there's anything concerning or bearish yet about what the breadth numbers are showing. 3 out of the 4 are showing breadth off their highs, but again, nothing that I would say is bearish. When we see those breadth measures breaking down below recent lows, then that's something that maybe is a warning sign. But again, just something to keep on your radar, not necessarily a reason to say, to sell all your longs and go short on the market or anything like that.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.